Stocktwits Nation. It's Monday, July 14th. I'm Katy Perry here with Shay Boloor. This is the Daily Rip Live. What's up, Shay? How was your weekend?
Morning. Finger got messed up, as you guys can see.
Yeah, that's.
It's a little ugly.
Is it broken? What's going on there?
I hope not, because the wedding's in 2 months. So, like, the worst case scenario, I'm like have a cast on. So, like, I
Oh
don't even want to see
no.
anyone, just in case that happens.
Oh my
Uh,
God.
I
Well,
know.
when are you getting it x-rayed?
No, I'm just gonna see like in a week if it's just as bad. Cause
Okay.
I'm gonna be in New York next week as well. So, if
Okay.
you guys might see me
Bi-coastal.
on TV with a cast or like just me holding it up so
Yeah.
the blood flow goes higher.
Was it like you jam it on the ball, a hard foul? What happened?
Yeah, it was. I don't know. I think it was a ball, but also
Okay.
could have been someone hitting me. All I know is I was in immediate pain, and I still played after as like an idiot.
Oh no.
But yeah.
Wow. One of those.
hmm
Look at you.
hmm
Look at you. What a great, hey, that's good though. I mean, I think it could be a cool look at your wedding. I went to my friend's wedding and the brother of the bride tried to saber a champagne bottle the night before the wedding and just like cut his hand up. And so all the pictures, he's in like a full, like it was like a tourniquet basically. And this was in like rural France. Like they had to drive 3 hours, but all the photos, he's like a mummy. So it could be a cool look, but hopefully, I'm sure it'll be okay. Although that's September, right? It's coming up.
Yeah, Labor Day weekend.
Oh
So
my
did a lot of planning over the
god.
weekend for that stuff. Not it's pretty stressful.
Yeah.
We went to some like peaceful place with my fiance's
Okay.
uncle to go over because he's what's that word? He's kind of giving us not giving us away. He's the one in between us when we get married, the bride and groom.
Oh, I don't know.
What's
There's a
no
word
no
for that person?
yeah, there's a title for that person.
Oh, best
He reads
uncle?
no.
I'm just
He
kidding.
reads uh like the ceremony. Like he's the one that's
Okay.
up there with us. I'm blanking
Okay.
on the name. Jeez.
It's all right. I
But
don't know. I'm
let me see.
but that sounds nice. So you met with him and talked
Yeah, the
through
efficient. Yeah, that's what it is.
efficient. Okay, nice. So that's fun. Well, I don't know. It feels like this week a lot's heating up. So we got, I'm like looking at the calendar. We got inflation data. Literally everyone at the Fed is speaking between tomorrow and Thursday. And then we're getting jobless claims on Thursday. Is also crypto week in DC. So there's some key pieces of legislation on the table. And this is happening as Bitcoin is reaching new highs. As of this morning, it crossed over, I think, 122K at 6 a.m. this morning. I had a lot of friends who are deep into crypto who made fun of me when I sold mine a couple years ago. So they're definitely rubbing it in. And I was just like, have fun being rich. I'm happy for you, but stop texting me. And that's not investment advice. That's just commentary on the state of Bitcoin right now. We also have bank earnings rolling in, along with Netflix and Pepsi, and another space company filing to go public with the ticker Fly. I think it's Flywire Aerospace. What a great ticker. Shy, like so much happening this week. Are you keying in on any specific areas, or just kind of assessing what's going on generally?
Well, earnings season's beginning, so typically when we're leading up to that, I don't make any kind of purchase because I want as much dry powder on the sidelines to capitalize on any overreactions, which there always is in any earnings cycle, where the thesis isn't broken, but the stock might be down 20+% based on some wonky narrative on the conference call or some weird metric on the earnings that seemed like, oh, things are getting potentially worse. That's not the case. Either way, there's usually a handful of names that are just way overblown on the downside reaction in the growth world, and I won't be prepared. So I have not been adding last week really, and by not adding, I mean I put a 1% cash in my portfolio every week. Essentially, I may be making like $1,000 ads here and there, but not really substantially. So I
Mm-hmm.
have a pretty big position. I think it's this week won't be as much of a earnings read or fireworks. We have Netflix. Netflix is very consistent. I think they don't provide a layer of information anymore on their subscription revenue or subscription accounts. So like it won't move the needle too much. Uh, I think there's a really interesting reason why they go first every cycle. I don't know why. Want to control the narrative, etc. But for my eyes, like I'm going straight towards TSM and ASML. Those
Mm-hmm.
two names are reporting this week. They are the pillars of the new digital economy, and a lot of people don't really think about TSM or for sure they don't think about ASML,
Yeah.
but they do think about TSM not as much as they want. But the way to think about it is ASML builds the machines, and TSM turns them into silicon, and then Nvidia does its thing from there on out. So without these two companies, there really isn't an Nvidia. So
Mm.
they're vital to kind of see, is this AI party compounding? Is it continuing? Is it still the main event? Spoiler alert, it still is. And I think it's going to probably highlight that. And who knows what Nvidia's price action would be from there. But that's why it's so hard to be bearish right now. Like you're seeing crypto hit um, all-time highs. You're seeing Nvidia like at an all-time high. Like these are two great benchmarks or symbolization of the appetite for this market, and it's risk on when you have crypto and AI just continue going up to the right, new all-time highs, which is very bullish. So I think this week we'll get a glimpse of how that AI party is going. I think it's gonna be strong, but that's kind of my tell. And there's also banks, but that's not me.
Yeah, less exciting. And so if you think about like a very very simplified version of AI value chain, you'd say ASML building the machines, TSM, and that drives into something like a NVIDIA. Is that generally the order of operations?
Yeah. So ASML is really interesting to the fact where there's a lot of FUD regarding their China exposure, and I think that's like overblown, but it's also kind of leveling itself out where it's becoming less and less of a component of their total revenue. The way I like to call ASML is like they're the kingmaker beyond the new digital economy. So a lot of times people know them as their DUV systems. Like really for me, it's the EUV lithography systems where they're the only machines capable of producing the high density transistors that are required to make, I think it's a sub 5 nm chips, which again is the backbone of every cutting edge AI processor out there. So
Mm-hmm.
like when you think about NVIDIA's H100, there is no H100 without ASML. Without ASML, there's no Apple M series. Without ASML, there's no custom Google TPUs. Like they all need ASML, and ASML has been penalized their stock price due to China exposure, but I think their machines are both the bottleneck and the lever that AI needs to pull, and I think they're such an essential part of the calculus for AI to hit its max potential. And while China escalations might still be a thing the rest of the year, and they might provide a moderate long-term risk, which is why the stock's been kind of anchored and not hitting all-time highs like Nvidia is. But I do think the demand for its equipment will continue to far outstrip the supply, giving its pricing power that they have, that we can just raise it 20% if they want. And the AI arms race, like ASML truly isn't just a supplier. They are the kingmaker. That's why I call them the kingmaker, controlling access to the latest and greatest in AI. So I think that's one name that if you want to put a value on something that really isn't pricey, that hasn't, it's lagging, but it's also so essential in a theme like AI, I do believe it's ASML, and this is a name that maybe can catch a bid. And you see their all-time high, I think it's $1,100. Like that's 40% away. That's yeah, that's substantial. Like it can move. So and it's also 33 times earnings. It's not expensive. I don't know. It's an interesting setup.
Yeah, so if I say I'm not as deep in ASML, it's so interesting that like there's the marquee names that get all the attention, like the Nvidia, but ASML is not one, at least outside of circles of people really deep in this, you hear a lot about. But they would assume they're very hyper reliant on the raw materials,
They
like
are.
lithium, like how. So they're
Oh,
where
I
do
don't know about. I actually don't know about the lithium angle. That's interesting, but I think
I was like lithography, lithium, but maybe not. Maybe that's not the case. But I was trying to see like what feeds into ASML even. But
well,
I guess that's needed across the value chain.
I mean, it starts with ASML. Like you need
Yeah.
ASML, and then TSM uses them to fabricate their own semiconductor chips, and then from there, ARM designs the architecture that powers those processors, and then from there, NVIDIA does its thing with CUDA, NVLink, and the high performance computing. And after NVIDIA, it goes probably Micron with the memory, and the DRAM and NAND storage solutions for that. And then from there, it's probably Broadcom that powers the networking for the AI. I call him the tax man, Uncle Sam of AI, because they're making bank on inference. And I think this earnings cycle, Broadcom is my favorite play in this whole theme, actually more than Nvidia. I just think
Mm.
that inference is freaking exploding, and they're just making so much money on the tax of AI, which is inference. And then after Broadcom, it's just all the hyperscalers providing the cloud infrastructure solutions, and then from there is like the data applications, like the Snowflakes, etc. That's kind of where my head is on
Mm-hmm.
how that structure, in order of structure, goes from, oh, I want to be an AI, this is how I have to do it, type of thing, and hopefully that helped everyone. It's the
I
mentality of that
think
that's how
I
it
think it's
works.
interesting to hear you break out like the relationships between these things, because a lot of times you'll just see a list of AI stocks and they're all kind of at the same, on par with each other, and it's just a list. But knowing sort of the order and how the commercialization across them comes together, I think is helpful. I want to shift over to drones. We talk a lot about drones, and on Stocktwits trending unusual machines. So they did an offering recently. They have a U.S. focused domestic strategy in the drone space. Shay, I know this is adjacent to kind of your thesis on the new age of defense. What do you think about drones? Is this sort of like the closest thing people can access to an Anduril in the public markets right now, or should we think about these guys a little differently?
I think so. The way I think about Anduril specifically, it's Archer. I think Archer Aviation
Mm,
has a lot of great partnerships with Anduril for the urban air mobility and defense logistics offerings that they have. UMAC is more of an autonomous fleet. It's like more of the command and control. I'm
okay.
still digging into that as much. Drones is a very interesting theme because like there's 5 ways of playing it. You can do Archer Aviation, which is again the urban air mobility and defense logistics. You have Ondas, which are Jake Wu is a big
Mm,
fan of Ondas. They kind of secure the network for drone communications. You have UMAC, the autonomous fleet and command and control. Then I think you also have RCATs, which field drones for tactical operations, and I'm blanking on the other one. Oh, KTOS. That's unmanned defense system. So the it's tricky because this theme is so early, like so early, and I don't know if it could be a standalone theme yet. Like
mhm.
it's such an infantry. Oh my god, it's a baby.
Yeah.
It's essentially a baby.
Yeah.
It's very dependent on government funds. I think that the news that we got over the weekend, or not over the weekend, a week ago, from Pete, the defense secretary, saying
Hmm.
that he's fast tracking a full scale drone ramp across the U.S. military. I think that highlights how much the defense is evolving, where it's going to be a lot more of like drones, futuristic stuff like that, the new battlefields above us type of thing. So I think these drones have legs, but fundamentally speaking, these drone names have legs, but fundamentally speaking, they're all pretty hideous. It's very unprofitable cash burn, and that's fine if that theme can compound as a long runway. I just don't know if drones can be a standalone. Usually, for me, it's like I rather invest in enablers of that kind of theme. Like the easiest enabler is Axon. We talk about Axon all the time. They're the command center for public safety, is what I like to call them. Everyone thinks about the cameras on the cops, but really it's the cloud ecosystem and the real world evidence that's being stored there that's going to be compounding nonstop. It's like one of the best monopolies out there. The next derivative of that makes so much sense that it's also going to be drones. Again, drones could just be cops in the air. That's essentially what it is. That's something that's such an easy synergy for Axon to capitalize on for a theme where they have the amazing fundamentals already. I feel like I can capture that drone theme through them rather than going all in for a pure drone play because I they're very dependent on government funds. There is a decent amount of China exposure in some of those names, and their corporate governance is a real issue for all 5 of those names I called out, except for Archer. I love the Archer CEO, but Axon will provide me that exposure. And if you don't want Axon, I'm sure Nvidia is going to be somehow has some
Yeah.
angle on providing the chips or whatnot for those drones. So like think about it that way rather than pure drone plays, in my opinion.
Yeah. Air Cops is a funny concept. I feel
Air
like that would be a
cops.
funny, like a buddy movie in a dark way. But you referenced Hegseth's announcement, the Drones for America Act. So the idea there is to ban drones with Chinese components by 2028. So heavily favoring domestic suppliers. But to your point, these are NASA companies that, you know, a lot can happen just because they're set up for favorability in the legislation doesn't mean that they'll play out. But I think this is continuing to be the word that keeps coming up. And going back to UMAC, that has an 81% bullish score on Stocktwits. So people rallying around that and talking about that this week. Curious what you guys think in the chat. My mouse died, so I'm just gonna lean forward. I knew this was gonna happen eventually. If you guys can't tell, I'm far away from my laptop, so this is not good. But let's go back to Tesla, because we talked last week about Tesla, this sort of consolidation or synergies in between your SpaceX, Tesla, XAI. Tesla shareholders could soon be voting on investing in Elon Musk's private AI company, XAI. This is after SpaceX invested in them. But since Tesla is publicly traded, he wants to get shareholder buy-in for that. And so that's why the shareholder meeting was pushed back a little bit to November. And now the sentiment is around, okay, maybe he wanted a little more time to curry favor for this strategy. Shay, it sounds like when I talked to you last week, you were like, yeah, I get it. I see the vision. These things should be working together. What do you think he needs to do or say, or how should he storytell this to shareholders ahead of the meeting to paint this picture of why this is a good thing for Tesla?
So I think Tesla, Elon actually made a comment this morning that he doesn't support it for some reason. So like, I don't know, he's flip flopping a bit.
I think he said he doesn't support like unilaterally investing, but he said he'd put it up to shareholders.
Gotcha.
So yeah, maybe you're right. Maybe he's not trying to convince them. He's just going to put it up for a vote.
I mean, maybe this is his way of like getting what he wants, thus sticking his neck out, not handling heat. But it makes too much sense for these two companies to merge eventually. But the tricky thing is, XAI got a $200 billion valuation in the private markets already. Tesla's $1 billion. I mean, $1 trillion. Like, it's not just a casual acquisition and scoop it up inside Tesla's like umbrella. Like, it's going to be not dilutive. It's going to be very messy. Like think about Teladoc and Livongo, and think about these other massive mergers. Like, I know this one's different because it's under one founder, so maybe it's like more streamlined. But these kind of massive mergers are very messy in the near term, immediate term. So I also think that these foundational model companies, OpenAI, XAI, Perplexity, like they are getting bubbly a bit, where there is so much demand in these foundational models from these hyperscalers, just to and from everyone actually in general, just to like make sure that they're staying ahead in the AI race towards super intelligence, that there is overspending happening, and that's fine because the risk of underspending is far greater than the risk of overspending. But that is being factored into a lot of these valuations, and so I do have a valuation concern on XAI being worth $200 billion. It's crazy. It's almost a mega cap all of a sudden, where I don't think it existed 3 years ago. So it's crazy, that kind of mentality where you're playing top dollar. But for whole Tesla's like angle for me, why I'm so bullish on them, is a lot of it is in their vertically integrated system. Like, they kind of control everything from the silicon to the sensors and software, and that data flywheel is very real, and it's going to only improve with every mile driven, every vertically integrated, every intervention, and every edge case. So all of it flows back into their system that they have in house, and then that loop tightens further with Dojo, which is their in-house supercomputer that's still in the works. Like, they're still building on that, but it's not taking any spotlight. But so now layer in XAI, that foundational model that's like really, really improving drastically. Like, from Grok 3 to Grok 4 was a huge jump, and that was designed from the ground up at the edge with low latency, high efficiency, and Like it's tightly aligned with what the Tesla hardware stack is built for the physical world. So they both have two of the same missions from the get-go. And I think that's in the new digital economy, you guys heard me and Daniel talk about this a lot. You kind of need to own the data, you need to own the deployment surface, you need to own the silicon, and now you also have to own the foundational models. Like you have to have control of the full stack. And that only works for Tesla if you bring XAI in the same roof because Tesla needs that foundational model innovation to unlock the human level cognition on all their devices in the physical world. But XAI also needs Tesla's deployment scale to keep learning. So it's an OpenAI, Microsoft type of relationship, and I hope they merge. But it's a pricey tag that's going to be required to make that happen.
Yeah, I mean, OpenAI I think is valued at 300 billion, and the perception would be that they're a little farther ahead than Grok, although
Wow.
there was a lot of excitement around the Grok 4 release. I'm curious just how you look at this. Like, what advantages does XAI potentially have over OpenAI, or how would you, if you had to pick a winner there? I mean, do you go with Musk, who you've said before he doesn't miss, or OpenAI, which has, I would say they have an advantage just on user adoption and awareness, but on a product to product a comparison, they seem to be hitting parity a little bit.
Yeah, I mean, there is an overwhelming supply of these foundational models now out there. Like OpenAI had the advantage of being the first mover, where clearly everyone knows ChatGPT, and I think so. An interesting thing about OpenAI is it's very similar to Netflix. If you make that example, where there's so much mind share because of being that first mover advantage on the consumer side. I don't think consumers will ever go away from ChatGPT. I think they cemented that as their go-to foundational model because they've been accustomed to it. They're familiar with it. That's the only one they've used from the beginning. Gemini is incredible. Perplexity is incredible for code generation. XAI is clearly improving drastically as well. But you also have all these Chinese models, like you're seeing right now. DeepSeek is doing really well. Gwen is doing well from Alibaba as well. So like I think the B2B is becoming gutted with an oversupply of these foundational models, and a lot of these companies can like pick and choose which ones they want to use because each one has their own specific characteristic that they excel at. But for consumers, I don't think people are going away from ChatGPT. Maybe as Gemini continues to improve, like Gemini truly is the connective tissue of all the suite of products under Google's umbrella. So when you think of Google's product suite, it's stuff that we use every day. That's just as important as Apple products that we use every single day. Gmail, Calendar, Excel, not Excel. Geez, that's Microsoft.
Sheets.
Sheets, like all those like workspace. It's all the
Yeah.
workspace products. You use Google, and it makes too much sense that Gemini is going to be a connective tissue of that, especially as AI agents continue momentum. And that theme still hasn't hit this ChatGPT moment, but when it does, it's going to be like a no-brainer that if you're in the workspace, you're going to have to be using Google and Microsoft AI agents because it's just you're using the products already. So I think B2B is going to be very tricky for a lot of these foundational models, and I think that's Google and Microsoft to lose. Consumers, I just don't think they're going to really adopt Gemini as much because of ChatGPT. I don't know. I could be wrong, but I just think
Yeah.
ChatGPT has mind share. Big
Yeah,
one.
I mean, definitely. But we talked about when Daniel was on maybe it was a few months ago, maybe a few weeks, but I think a lot of people are using Gemini without even knowing it right now. So like it's in your Gmail, I even noticed it in my Drive, it's summarized. So it's interesting because it's like ChatGPT is the proactive consumer choice, but Gemini is so embedded into everything. And I think it's really interesting you break out sort of the battles going on the consumer front, which like you and I, other people using this day to day, we're like, oh yeah, ChatGPT, OpenAI, crushing. On the enterprise level, it's a different game, and that could go to other players too. So I think it's interesting to think about it in those two ways. And it's the same thing with any type of software. You have the software that dominates the consumer, and you have the software that dominates the enterprise. It's funny you mentioned using multiple models. Jensen Huang was on, I think, CNN this weekend, and someone was like, what's your favorite model? And he was like, I use all of them and pit them against each other. And I think that's what you were saying. Certain models will be prioritized for certain functions within an organization. And it's going to be a mixture, which I think about just on a expense standpoint. How much of a share of like software subscriptions are going to be LLM and AI over the next few years compared to other tools? Even me as a everyday person, I feel like every 3 months it like doubles what I'm paying, and I could justify it because I'm saving time and I'm unlocking value. But on an enterprise level, you could think about, man, like the IT department and even finance, managing all those licenses, those teams across everything. That seems like a mess, but also in the favor of these companies that are selling in on a seat basis.
Well, also, yeah, I mean, I agree with everything you were saying, and also, like, when you asked me about XAI, like, versus OpenAI, like, what's the difference? Quality of data that Twitter has is unmatched.
Hmm.
Quality of data is the fuel for these foundational models to improve their quality scores, and that's something that XAI doesn't have to go external with. OpenAI does. OpenAI also doesn't create their own chips. I don't think. Maybe they're working on it. I think they announced they're working on it, but I haven't heard any updates. So I think that's a dud. But that's why XAI and Google or Gemini and XAI, the reason they're improving their foundational models so quickly and so drastically over Llama, over ChatGPT, is they own the freaking data. They have the quality of data they have in house is unmatched, and it's something that's going to be constantly available for their own foundational models. That's huge. That's essentially everything. So I think that OpenAI, the only way that the $300 billion valuation makes sense to me is if they're actually going to be solving super intelligence or closest thing to AGI. That might be the case, but that's a huge risk when they're already same valuation almost as SpaceX. And you've seen what SpaceX is doing in the space economy. That's like a freaking monopoly in itself, where the market share that they have and how much the U.S. government needs them, and that's the political pawn that's being used in this Trump Elon war, etc. OpenAI, like OpenAI really needs to solve super intelligence and AGI, but they don't get this wrong. Like they got hit hard this past month on talent. Like talent left, and talent is every AI brains is everything right now in this race, and they kind of have a backfill they have to fill, and who knows like how much that's going to anchor them in this momentum they've had the past couple of years.
Yeah, we've seen a lot of headlines about Meta poaching talent, and obviously there's obviously a PR machine behind this, right? Like it's not just leaking that these things are coming out. If I had to put money on it, I would say this is a corporate comm strategy from Meta that every time this happens, someone's telling a reporter and giving them all the information to make this wave of news feel like Meta has the momentum. But I'm curious if we'll see. I could see the similar thing happening with Grok. Like we haven't heard any major announcements of people going to XAI, have we? Like it's been mostly Meta, and it's a matter of time. I think when you were talking last week about kind of these cults of personality and then following behind a leader you think is going to win out. I'm curious after this latest release of Grok if we won't hear of talent going over there.
Well, I think he got a lot of AI brains like when he started XAI. And I think that, again, I have not looked into this. I don't think many have left. And I think that he's happy enough with his AI talent because a lot of the big brains already got there a couple years ago.
Yep.
That he doesn't really need to add more. Like he's confident enough. And just look at the capabilities. Like literally, they did not exist 3 years ago, XAI. And now they're just like, Grok 4 is incredible. And they're valued at $200 billion. Like what's the need for Elon to kind of convince people and pay up for people to come in when the aura that he has already will attract the biggest and greatest?
Yeah, that was our opening bell. I'm just gonna toggle my screen over here. The markets are open for the day. Let's see how things are going. Futures sliding a little bit. We have a little bit of tariff back and forth this week, but as Shay mentioned, Bitcoin soaring, AI stocks soaring. It's definitely a risk on signals as we head into earnings season over here. And we were checking the chat today, guys. You guys are very a lot of people have a lot of strong opinions on these AI players, which is fascinating, and I think goes into some of the news that's been bubbling up on just tokenizing companies, whether they're public or private. Because if this trend continues and the regulatory environment is favorable, that would give people a chance to bet on with their dollars an OpenAI versus an XAI versus an Anthropic. A lot of these giant companies are private, but tokenizing would seem to give retail investors more direct access to pick a winner. I'm curious, Shay, just on that note, we've been talking about tokenization a lot. If there is a private company that you would like to have access to and just haven't had the ability to, how would you think about investing via a tokenized asset versus a direct investment? Have you put any thought into that for companies that are private? Or what is your general thinking around that?
I haven't as much, maybe because I'm a TradFi guy.
Yeah.
I don't know. I just don't want to really
Yeah.
to go down that avenue. But I'm wondering. So for me, I'm curious on if this is going to change the urgency for a lot of these private companies to go public. And I think that's like an interesting angle where there is such a headache of being a publicly traded company. That's why you're just like not in the private markets. There's a lot of capital in the private markets, and that's causing a lot of these companies to have these up rounds, and they're having Series E's, for example. Like that was a rare thing. Like you don't go past Series like a D at that often.
Yeah.
Now there's E's, there's F's, probably some G's. I don't know, but I think that's if there's a way for investors to privately invest in these companies in the tokenization routes, maybe that's going to take away the demand that if they're going to go public that they would get in their IPO roadshow. Who knows? But I think it's really important to actually own the assets. I don't really know the economics behind tokenization of real world assets really that much.
Yeah.
That's just in my lane, but I hope it doesn't delay these hot private companies to go public, the Andurils, Databricks, SpaceX, Stripe. These companies, like the appetite is there for them to go public. It just is. They just don't feel the urgency to do so because they can get the capital they want in the private markets without having to deal with every 3 months of answering analyst questions in a public forum, communicating like these metrics that have to improve every single quarter. Those are headaches. So I think that's I hope it doesn't delay it, and it does. I wouldn't feel as comfortable buying in tokenization versus a direct asset.
Yeah.
That's a TradFi guy.
A lot of question marks still there. There's a good, the Fortune's term sheet this morning by Ali Garfinkel talks about tokenization a bit. And like, basically she articulated it as like the easiest way to think about this is they give you, what did she say? They give you exposure, but not ownership. And of course there are still advantages to going the traditional route. I mean, you want to get into the indexes eventually. You want to get exposure within ETFs. There's things there that legitimize you. But it is a lot happening fast. And we got some comments. People want to talk about crypto. It is crypto week in DC. Bitcoin is soaring. I know like crypto is not usually what we focus on, but it's becoming, I think it's interesting that it's blurring more into traditional finance, as you mentioned, Shay. Like all these things are sort of converging. So crypto week, we have, well, first of all, Bitcoin this morning hitting new all-time highs. Crypto week is really looking at how lawmakers are thinking about a few key bills. So one bill on the table is how to regulate stablecoins. Another is to define the crypto market structure. A third is to block a government-issued dollar. I think a lot of the complaints with the prior administration among the crypto community was there was a lot of you can't do this or penalizing things versus saying here's the framework you can operate in. And so that's, I think, what the crypto community is pushing for is not necessarily less regulation, but I'm sure they would love that, but more so a workable framework that they can build around. And so, how much of this is like a marketing banner on just showing support with the crypto community? But I think there's a lot going on right now this week that we should pay attention to because these political battles that play out do manifest in real world impacts. I know, Shay, we talk a lot about Bitcoin, crypto, not your focus, but again, like another signal that this is just continuing to be more mainstream. What are you looking for any specific headlines out of this week? Or what point would you really start looking at crypto seriously within where you're focused?
I mean, I think it's a very real thing. I think it's just as big as an asset class as gold and silver now, and I think that's going to cement themselves into permanence into the financial systems forever. I just think that for me, like the reason I didn't participate in buying crypto during April was it held a lot of relative strength. Like I thought there was greater discounts in the equity markets because a lot of companies filled that election gap from November where Bitcoin didn't. Like Bitcoin didn't hit 70,000 like a lot of people were hoping for. It maintained a lot of strength. And there is a cyclicality risk associated with crypto. That's always been the case. Is this one different maybe? Potentially because of the ETF inflows, like that could be the case. I don't know. I'm not very much in that space, but all I know is that historically there's been a cyclicality nature towards crypto, and I think right now we're in that blow off top phase. Who knows how long that's going to last? But I think it's one that's I'm on the sidelines because I don't own too much of
Yeah.
crypto at all, and I'm just waiting for a better opportunity when there's actual blood and fear in the water. Like I think maybe the angle would be some Black Swan FUD events. I don't know what that might entail. It could be that stupid. I don't think quantum's going to solve the cryptography angle that Bitcoin is, but
Yeah.
that could be a real, like that crypto is going to. But that could be a real FUD that gets spread and
Yep.
gains momentum. Maybe that's what takes it down lower, potentially. But I'm waiting for some stupid, like every tech revolution, every kind of bull market, there's some black swan FUD event that causes it to
Hmm.
go far lower. I'm waiting for that for Bitcoin. And to
Yeah.
be honest, a 40% dip in Bitcoin is all I'm waiting for
Yeah.
to kind of really participate in. But it didn't give me the opportunity. And all I can say is the big, beautiful bill is only strengthening the case of Bitcoin. And I think that's what you're seeing right now. Like the
Yeah.
deficit is not going to improve, it's not going to go away. And Bitcoin's going to be even more essential for the whole North Star case of why you should own Bitcoin.
Yeah, and if you listen to Vlad Tenev's recent interviews, CEO of Robinhood, his talking point lately is really around crypto is infrastructure to be built
Mm.
upon, and so he's trying to force that narrative of the use cases, the applicability outside of it just being a digital currency. With the thinking being, if you prove that it's an infrastructure, you don't need to prove that it's legit simply by transactions alone. But I think there is a very real battle playing out between like the legacy players, the crypto players, and almost like frenemies. Like a lot of these big established institutions are leaning into crypto. You have BlackRock, others, you have ETFs. But at the same day, like they are not necessarily always going to work together nicely. And there was a headline out of JP Morgan this weekend regarding open banking. And open banking, just think of it as the fluidity of your data between banking apps. There's a company that's private called Plaid. It's worth a great deal of money, and it's sort of like a connector, so that when you log into a fintech, you can connect it to your bank with, it takes 5 seconds. And that's been really key to fintech innovation. Well, JP Morgan apparently has started telling fintechs that it's going to start charging them for access to consumer bank data.
Mm.
So pricing sheets already going out according to Bloomberg reporting. So that's impacting things like Venmo, PayPal, Coinbase, Robinhood. Obviously, this would be a hit on margins for those companies. They're going to be paying more out of pocket for access to this data. The debate is, it's consumer data. Can they charge for that? Morgan saying it's about security and they're investing heavily to protect consumer data. Obviously, it's also a play for them to get a piece of the action. But I think this is interesting too, because a lot of fintech innovation relied around the ability for this data to flow without friction. And in order for fintechs to continue to thrive, they're going to need that data. They're going to have to pay up for it. And maybe this is like traditional finance's way of making sure they're getting a piece of that upside. But I think it's interesting, and it's something to watch for your PayPal's, a lot of these companies that rely on those connections and haven't really been charged for that data before.
Yeah, I mean, I think it just highlights what we've been saying a lot in at Future on the AI front. Like everyone wants to own their data now, and they're gonna
Yep.
try monetizing it. Like it's really important to identify which companies that you own actually own the data and
Yeah.
aren't renting it in their offering. And I do believe that it's something that might be overdrawn of how much like PayPal is getting affected by that and Square, etc. But
Yeah.
it's an alarming momentum. Like if this is a real thing that's going to only continue, be cautious on who owns the rails and who's the train,
Yeah.
essentially, because the train, it's going to become more expensive now to use to go on that those rails, and those rails are going to start making more money via margin expansion opportunity because they have something that every other train needs to get from point A to point B, and they know that, and that's pricing power. So JPM makes sense for them to do this. Uh, these companies like aren't gonna like all of a sudden. I don't know if you can change. Like you need that customer data. Like I just
Yeah.
don't know what you can do. All I know is I'm curious on like the Snowflake front, like Snowflake's ecosystem. That secondary mode that I love talking about is data liquidity, where these customers can sell data to one another in their ecosystem.
Mm-hmm.
Banks are a major customer of that. So I'm wondering
Yeah.
now that if that's a potential tailwind in all this, actually, where you can kind of access the customer data that JPM has via the data they store in Snowflake's ecosystem. Maybe that's a tailwind for Snowflake. Who knows? I haven't looked into it too much, but
Yeah.
uh, it's interesting.
The data piece is I think unless you're like exposed to it directly, you don't really think about how many like side businesses these companies have just selling data to each other. And when every time you don't like read the terms and conditions, like that's what that's saying. Like we can sell your data to whoever. And there's so many businesses that rely on getting data from other people, especially in like ad tech. I mean, there's companies that just exist as data aggregators from other sources. They clean it up, they structure it, and they sell it to help with ad targeting. But that exists, you know, everywhere. I think one thing that's interesting, if you're into fintech, the case study on Plaid is really interesting. So Plaid being that connective tissue, when Plaid first came to the market, the banks all freaked out. And Plaid had to do a lot of politicking to say, hey, this is good for everybody because there's going to be more transactions, there's going to be more usage across everything. Fintech innovation is going to lift everybody up. And that really held out in the evidence. But I think now banks are sort of pushing back and saying, hey, wait a minute, we want a piece of this. Ultimately, you know, and what I'm reading from the reporting is it's most likely it'll get passed off to consumers somehow, which tends to be the case. But it is interesting to think about the flow of all these data points behind the scene that we don't often think about those as much as maybe we should. And I think it's smart to bring up Snowflake in that example as someone who's sort of at the epicenter of that.
Yeah, I think again, these data infrastructure players, that's where you want to be in the stage two AI theme. And I think that's really important to not invest in a middleware company or a company that offers a layer because those layers are going to start getting new competition. Vertiv is a great example. Amazon made that announcement last week on potentially providing cooling solutions. Uh, and I think that is clearly in the arena of what Vertiv has been doing. And Vertiv went down 15% in one day. And
Whoa.
then people realized, like, exact future, like we dropped a note at future. I'm like, this is not going to be a cannibalization. It's just an extra player in the space. Probably will pair up with Vertiv, and Vertiv has filled that gap since. But I think it's a great highlight of what's to come, where these bigger players want more control, more optionality, and if you offer a layer to them, don't be comfortable because that layer is going to get replicated a bit with new competition. And these software companies, these IT spend, it's bloated. It's
Yeah.
so bloated. And especially the last 2 years, because this has been the conversation in IT in the boardrooms. The board of directors tell the CEO ever since 3 years ago, what are you doing to get ahead of AI?
Hmm.
CEOs go to their CTO with pressure, like you need to start doing stuff towards AI initiatives, and just here's not a blank check, but be as aggressive as you want. That's causing these CTOs to kind of bloat these software spend in
Yeah.
order to like satisfy their CEO and get as many tools as possible to figure out what to do. But that last 3 years, it's freaking bloated in the IT world. Now, with AI agents starting to gain momentum, and we just got started at that, that's going to replace a lot of seats because it's just the first wave of AI agents is going to replace what people do in the back end of a lot of these software companies. That's going to cause seat removals. That's going to cause a lot of these middleware companies to now like adjust their pricing model from subscription to consumption. That takes a while to do. You're seeing ServiceNow doing a great job with that via Raptor DB, but ServiceNow is the goats in the space. Like I don't know if other companies who are tier 2 and tier 3 can do that kind of pivot as quickly and as eloquently as what Bill's doing in ServiceNow.
Hmm.
They should be worried. Like I think a lot of these layered software companies should be very worried about the AI tsunami that's coming, and data infrastructure is the best angle to do so.
Yeah, I mean, it is fascinating when you think about like AI innovation at a lot of these companies. A lot of them, it is just they built a wrapper around an existing product, and that makes me wonder, like, you start building your whole AI capability is built around one LLM. I feel like the pricing leverage there is not there. Like you
Yeah.
could just you're at the mercy. Your whole AI product depends on one or two other things, and that's to your point. The end LLMs seem to be in the best position once other companies are depending on them so much to jack their prices up and go from there. But the other hand, you get it. Like if you're a CTO, you're not going to reinvent the wheel if there's an existing model that's great for what you're trying to do. But it does create very interesting dependencies on the IT side that I think we'll see the effects of that as time goes on, but they're just going to become more reliant because they're not going to rebuild.
Yeah. Also, they can't afford to rebuild because guess what? That takes time,
Yeah,
and you can't afford to lose time right now.
yeah. Fascinating stuff. I want to flip over to space news for a minute. We had just people talking about Rocket Lab in the comments, Redwire. We have a new space IPO that has filed, Firefly Aerospace. The ticker is Fly. That is a great ticker, just a great pickup. I can't believe nobody had the Fly pickup. But they have officially filed to go public. They are Texas-based, known for their Alpha rocket and Blue Ghost moon landers. They submitted their paperwork last week. They haven't discussed the size of the raise yet, but obviously the space economy continues to be a hotspot for investors, especially on the commercial side. And what's interesting about this is, they're going the regular IPO route. I think a few years ago we saw a lot of space companies going public via SPACs. I think the market's maturing a little bit. Firefly has some moon missions planned. They have some government contracts lined up. So, all of these, similar to probably drones, there's a lot of these that maybe their balance sheets aren't in the best state ever, but there's a lot of promise and excitement in the space economy. So I don't know if I didn't know this company, except I did know that they hired CNBC's space reporter Michael Sheets as their head of IR, which I thought was so smart. And I'm wondering why more companies don't just hire people covering their space to run their investor relations, because who knows better how to communicate. But yeah, I'm curious, Shai, like on the space economy overall, like I know you're obviously bullish on things like SpaceX, but do you think there's more room for even more of these players to get out there in the public markets and duke it out with growing competitive set?
Yeah, I believe we're entering a new phase of the space economy. Clearly, especially with that Fly company going public. I've never really heard of them, but for me, like I view the space plays as three names: Rock Lab clearly,
Hmm.
ASTS clearly, Redwire clearly as the infrastructure plays, and I think Rock Lab is one that this morning they got a very bullish note from Citi.
Yep.
$50 price target. They see that by 2029, so that's in 4 years, Neutron, which is about to get launched the second of this year, that's going to be a massive, massive catalyst for the stock. They see them having 20 annual launches a year in by 2029.
Whoa.
That's huge because guess what? Neutron is $50 million. I think it's $50 million a launch. That's a drastic difference than what they currently have right now. And they see Neutron generating $2.5 billion of revenue by 2029 alone. And that's substantial because for Rocket Lab, like I think I'm trying to remember. I think last quarter 40% of their revenue was tied towards launch services, which
Hmm.
again was substantially higher than a year before that. I think it was 20%. I think it doubled. So you're seeing there's a lot of institutional conviction in their launching business, where the Pentagon, I think, placed Neutron, the one that's going to be launching this year, on the NSSL shortlist. And that's one of the places to be if you want the most defensible recurring launch procurements in the United States. And that's where a lot of funds are going to go in the next couple of years. And that is another validation at the federal level and that really is where a lot of these industrial primes are born. So I think that's an area where the market's now pricing in Rocket Lab past like couple weeks, especially when the Trump and Elon face off. Like there's going to be like, what's the next federal player in that space? It's Rocket Lab via
Mm.
Neutron, and that's why Neutron is starting to get priced into the stock price. If Neutron proves that they're flight worthy, that they can like Rocket Lab won't just be the second most capable launch provider in the U.S., but it will be kind of Neutron's their Trojan horse, becoming the one with the full vertical control. Again, what I emphasize in AI, what we emphasized in fintech just now, space is the same thing. And Rock Lab's the best player that vertically controls its access to small, medium class launches with with Neutron now, in-house satellite platforms, the avionics, the engines, the guy, like everything they own end to end as a full-on space prime now. Once Neutron gets launched and succeeded, hopefully. So I think that the second that Neutron flies, I think it will cause a re-rating on the stock, but that re-rating might be happening right now. Like they are just like on a freaking tear,
Mm.
and I think that's a really interesting angle. ASTS, clearly, you guys hear me talking about this name all the time. Like they're not just building satellites; they are like building this telecom architecture that's going to be a lot of these OEMs are going to be a lot of these providers like Verizon's, AT&T are just going to enable what ASTS is offering. Is not going to replace it, and I think that piece by piece and license by license, like they're going to validate what their regulatory mode is, and you're seeing that stock get reflected off that as well, without making any real revenue yet. Like that's how much confidence there are in their offering and product, and I think that we've moved past the space as a spectacle era now, and you're seeing that validation, the chapter two of the space economy with these names is catching insane bids. That's kind of justified because fundamentally speaking, it's not justified. But if it's a $2 trillion economy in the next 15 years, there's only a handful of pure plays right now.
Mm-hmm.
Only a handful. And even after the most insane runs, ASTS was that $11 billion market cap. That's pennies
Yeah.
at the $2 trillion economy. Rock Lab, 15 billion. Pennies, especially when they're like both building like the American Tower of Space via ASTS and the FedEx of Space via Rocket Lab. Like those two can have substantial runway if they keep delivering. And the appetite right now for these risk on themes is very real. And if you want exposure to space, there's only three names that you can really get that same kind of alpha in, or that's high floor, high ceiling. It's for sure Rocket Lab and ASTS, and I do think Redwire is a very interesting infrastructure play.
Yeah, I mean, I love the articulation of moving beyond space as spectacle because, like, when all these companies were spacking, it was like, okay, who had the best launch videos? And it was like this visual, you needed to see it to believe it. And as it matured, you're right, that the infrastructure behind it. When you were talking about ASTS, would you say, are they a comp with Starlink? Or they do slightly different things? Because then that got me thinking about how Starlink might play into, like, if all of Elon's businesses are sort of have an interplay. Maybe there's a grand plan. Where would that fit within his plate of companies?
Yeah, so I think a lot of people I get that question all the time because a lot of people think that they're competitors. I don't believe ASTS and Starlink are competitors because
Hmm.
they're both space-based connectivity plays, but they're both beaming data, I guess, from the orbit. But if you know the product offerings, like they're two fundamentally different business model targeting different layers of the telecom stack.
Hmm.
And I think for like Starlink's model, for example, I think it's more of a vertically integrated broadband network beamed from orbit, tuned for like homes, mobile vehicles, and remote outputs. But like, I think it's a very capital intensive solution towards telecom stack, one that requires like dishes, routers,
Yeah.
satellites, and like a lot of supply chain luck just to reach the customer. But I think ASTS isn't building a satellite network in that image. Like they're like not chasing these terminal installs. They're not chasing like these ground kits. Like they're just trying to redefine the edge entirely, not through hardware, but as a smartphone in your pocket. And I think that uh, They don't require modems. They don't require dishes. There's no installation. Just a tower in the sky talking to your phones that we already carry in that carrier network that we already pay. And that's something that Starlink doesn't have because that's Starlink needs. It's a entirely different model, and I think that difference matters. Where ASTS is Starlink with less friction,
Mm.
and I think that Starlink has to win every single customer every time. Where ASTS really has to win a big contract and inherit, and in that big contract they inherit tens of millions of users. That's how you scale this business model.
Yeah.
Starlink isn't about scalability, and I think that they don't need to be, but ASTS does. And I do think that their business is in routing and not in retail and in telecom, and that distinction is everything, especially being more B2B than B2C. Like B2C is a headache in this
Mm-hmm.
field, and I just I just don't think you want to be that. So hopefully that answered the
No,
difference.
that definitely.
It's a nuance.
No, it's super helpful because you're right. When like, right, we're not in the trenches all day. We're scanning headlines. If you read the, one sentence description of these companies, you're like, oh yeah, it's the same thing. But to your point, look at who they're selling to, look at the business model, look at the problems they're solving, and they're quite different. But the space economy continues to be a fun one to watch. As I mentioned, there's a lot happening this week. Obviously, we're going to be here all week, bringing you guys what's going on. But as we mentioned, we got some, some speeches from the Fed coming, inflation data, jobless claims, bank earnings, crypto week. I'm sure there will be some headlines coming out of that. Shay, any final thoughts as we head into this trading week? Even though I know you're in the lab right now, you got your head down, but any other topics that we didn't touch on, or any other things that might be top of mind for you?
Yeah, I'm just trying to see Stereo Labs why it's down 8% all of a sudden. But
Mm,
I think for me this week, earnings season. It's
yeah,
started. So I think this is the first cycle that you're going to see the tariffs, the real impact on tariffs, and
yeah,
I think that's going to provide a lot of volatility. And I think that Netflix is kind of safe from that. Netflix was been the tariff safety blanket in a way because they're not affected as much with the aftermath of that. But I think you're going to see a lot of players this cycle of like, whoa, it actually had a big impact, and then you're seeing this commentary on Trump, these tariffs, 30%,
yeah.
etc. on Mexico and EU.
EU.
Like if that if there's any company that if there's any company that doesn't deliver on their earnings due to tariffs, and you're seeing these like headlines like show potential reacceleration of these tariff wars, that's not good. So I think I scared Katie away a bit on the tariff talk. We're at the top of the hour. Be safe out there. I think today it's a little red, not really, especially after the last couple weeks, couple months run up. There might be some profit taking ahead of earnings season beginning. So maybe it's going to be stagnant, anchored down until we get the major players to report. Next week's a huge earnings week. This week's like a little toe in the water, but yeah, just be cautious out there. Don't get too greedy ahead of this earnings cycle, because it's going to be a very polarizing one.
Yeah. I love how there's so much going on that like we only got to the 30% tariff threat to the EU and Mexico at the last 2 minutes of the show. But that's what's going on. Things are heating up. We will be back with you guys tomorrow morning at 9 a.m. Eastern. Great day in the chat, guys. Love the participation. Keep it up. We love hearing from you. We love hearing the things that you want to talk about. So bring that same energy tomorrow, and we will see you guys then.